All right, today we're going to pull back the curtain on something huge, a really powerful concept in trading called the draw on liquidity. And look, this isn't just another strategy you'll find online. This is about getting to the heart of it all, understanding the hidden logic, the secret rhythm that actually tells you where the market's headed next, and more importantly, why. I mean, this is the question that keeps traders up at night, right? You've been there. You learn all the patterns, you follow the rules to a T, but your results, they just feel like a total coin flip. A win here, a loss there, and you just can't seem to get any real momentum going. So, what is the actual missing piece of the puzzle here? And this, right here, this is the absolute root of the problem. See, most traders get completely obsessed with how to trade. How do I enter? Where do I put my stop loss? And in all that noise, they totally forget to ask where the market is even going. They're stuck reacting to what the market just did, instead of actually anticipating where it's logically being pulled to next. And trust me, that one single flaw, that's the engine that drives most of those painful losing streaks. So here's the game plan for today. We're going to start by breaking down that huge mistake. Then we'll decode what draw on liquidity really means. After that, we'll get into the market's natural ebb and flow, figure out how to trade the highest probability move, and finally, we'll put it all together into a new framework you can start using right away. Okay, so let's dig into this. Learning a setup, that's where we all start. But honestly, it's just not enough. The one skill that truly separates the traders who struggle from the ones who find consistency, it's this anticipatory skill. It's all about being able to build a logical story, a narrative for where the price is going next. And just as important, you have to know why it's going there. I bet this hits close to home for a lot of you. When you don't have that anticipation, you're always a step behind. It feels like you're jumping into trades only after the real, powerful move has already taken off, right? It's like you're chasing the market's shadow. But hey, stick with me, because by the end of this, you're going to learn how to get in front of the market, not just chase it. So how do we actually build that skill? How do we learn to anticipate? Well, the absolute key, is understanding the market's magnetic pull. And that's what we call the draw on liquidity. I want you to literally picture the market having these two giant magnetic poles. Price just can't help itself. It's constantly being yanked from one to the other. So let's break down what these two poles are. Okay, first up, we have what's called external range liquidity, or ERL for short. The easiest way to think about this is, well, it's the obvious stuff. It's the old swing highs and the old swing lows on your chart, the places everyone can see. That's where all the stop losses and breakout orders are just sitting there, clustered together. They act like these huge, powerful, visible magnets for price. And on the flip side, you've got internal range liquidity, or IRL. Now, if ERL are the visible magnets, these are the hidden ones. Picture this. Price makes a really fast, sharp move and leaves behind a gap, an inefficiency. You've probably heard of them as fair value gaps, or FVGs. Just think of it like a vacuum that price creates, and the market hates that vacuum. It feels this need to go back and fill it in, to kind of rebalance the books before it has the fuel to make its next big move. Okay, so once you start seeing the market through this lens, through this framework of internal and external liquidity, something amazing happens. You realize that price action isn't random at all, not even close. It's actually doing this constant, predictable dance. It's this beautiful, rhythmic ebb and flow between those two magnetic poles we just talked about. And this is where it gets really simple and really powerful. I mean, look at this. When you boil everything down, all the crazy, complex movements you see on a chart, it really only comes down to two things. Price is either seeking out those old highs and lows, that's the external stuff, or it's going back to rebalance those gaps, the internal stuff. That's it. That's the whole game. And here's how that rhythm plays out. Think of it like a giant pendulum. First, the pendulum swings way out to one side and sweeps some external liquidity. An old high or low. Okay, job done. Now what? Its mission completely changes. The pendulum now has to swing back inward to go rebalance at an area of internal liquidity, like one of those fair value gaps. And that rebalancing part is so crucial. It's like the market is refueling, filling in the gaps, and gathering energy so it has the power to swing all the way back out again towards a new external target. Okay, let's be crystal clear here, because this is probably the most important part. Not all market moves are created equal. Not by a long shot. That first move, the one from external back to internal, that's just a rebalancing act. It's usually choppy, it's corrective, it's the lower probability trade you want to avoid. But that second move, the one that starts from the internal point and explodes out towards a new external target, that is the expansion. That's the main event. And that is the high probability move we want to build our entire trading plan around. So the million-dollar question is, how do we actually use this? How do you stop getting trapped in that choppy, manipulative move and start consistently riding that big, powerful expansion wave? Well, let's connect this whole idea to a model you've probably heard of before. Yeah, I'm talking about the AMD model, accumulation, manipulation, distribution. We all know what it is, right? Accumulation is where orders are being gathered. Manipulation is that tricky move against the trend. And distribution, that's the real explosive move we're all looking for. Well, guess what? This whole internal and external liquidity framework we've been talking about, it's the hidden engine that makes the AMD model actually work. It's the why behind the what. Just look at how perfectly this all lines up. That manipulation phase, it's not random at all. It's a totally calculated move. It's price diving from an external point specifically to go fill an internal one, our IRL. It's a complete head fake designed to trap everybody on the wrong side of the market. And then, once price has refueled at that internal level, the distribution phase kicks off. It's literally like a rocket taking off from its launch pad, the IRL, and just blasting towards its real target, a brand new external high or low. And folks, this is the paradigm shift. This changes everything. When you focus on trading that distribution leg, you are perfectly in sync with the market's true momentum. You're trading with the big players. You're not trying to catch a falling knife or some tricky reversal anymore. You are literally surfing the tidal wave of order flow. And when you do that, the odds just fundamentally stack up in your favor. All right, let's boil all this theory down into a simple, practical framework, something you can literally pull up on your charts the second we're done here. Think of this table as your new cheat sheet for reading the market story. It's super simple. Let's walk through it. Look at that top row. If price sweeps an old high or low, that's our external liquidity, then your next target is an internal inefficiency, like a fair value gap. That's the manipulation move, right? And your edge there is lower. But here's the magic. Look at the bottom row. If price fills that inefficiency, then your next target becomes a new high or low. That's the distribution. And that is where your edge is highest. It's that simple. So let's make this super practical. Your goal from now on is simple. You need to become a patient predator. Stop chasing every little flicker on the screen. Your job is to watch price take out that external liquidity. And then you just sit on your hands. You let the manipulation happen, and you don't get suckered in. You are laser focused on one thing, waiting for price to come back and fill that internal liquidity. The moment it does, that's your trigger. That's when you join the powerful move and ride that distribution wave all the way to the next external target. Look, when it's all said and done, this framework just changes your entire perspective. You'll stop seeing a bunch of random candles and confusing patterns. Instead, you're going to start to see the story, the underlying narrative. You'll see that constant pulse between the market rebalancing itself and then expanding. You'll finally be reading the market's intention instead of just reacting to all its noise. So I'll leave you with this one question. Now that you know the market's secret rhythm, do you really think you'll ever see a chart the same way again?